Alright guys, hope you're doing well. We're doing a reaction here and this will be on, what's the name? Iman Trading. I like this channel because he always exposes some fake gurus and stuff like that. I love it. He also exposed ICT, of course, and a lot of other guys. So without further ado, let's jump into it. This video will be on Don Vo. It's just this guy I saw sometimes from Controller FX. I used to watch this channel a little bit, but it was not my cup of tea because the trades were kind of shady. I felt always like something on gold and just scalp out a little bit or something like that. I never could really completely understand what exactly they're doing. But the channel was nice. I mean, they did well with the live streams, of course. And yeah, let's look into this kind of video. Alright guys, here we go. Let's make it full screen then and let's start.
On August 29th, Don Vo completely blew an investment trading account that his followers had put millions of dollars into. In just a couple hours, he lost them everything. For some, it was their life savings. Yet two somehow emerged from this disaster with huge profits. Don Vo, the YouTuber who directly caused.
Okay, that's pretty crazy. So basically he blew an account, I guess, or multiple accounts, right? And he made money of that. That's pretty shady. Let's see.
Caused it, and Blueberry Markets, the CFD broker that it all ran through. What happened? How did he manage to pull this off?
I know Blueberry Markets very well. I used to trade with them as well, so let's see what's going on.
And why are people suggesting collusion between him and the broker? Something doesn't add up. When it comes to Forex and CFDs, a broker like Blueberry Markets can do something referred to as booking trades. This means that instead of trading against others around the world on a centralized exchange, you are trading against your broker. And in a world where most traders fail because they follow frauds like Don Vo who sell courses and trading signals, booking is a good business model.
Okay guys, yeah, so basically booking, this is what every broker does, right? And it just means that you're not really trading on the exchange itself, right? Basically, the CFD brokers, they create an internal exchange, right? That is kind of generic. And they basically take the other side of your trade. This is just how it works, right? So once you're booked, basically you're trading against a broker, you're not trading against any other trader. And that's why you also have then very instant execution normally and stuff like that. So there are also some advantages of that. Of course, low cost as well. This is like typical market maker. And why do the broker do this? Because they know that 90% of the traders will lose, or even more, maybe 95% of the traders. And why do they lose? I'm not really agreeing here. I mean, it's fun because they buy these shitty courses from everybody, but I don't think this is actually the reason. I don't know if this course of Don Juan or whatever his name is, it's good. I don't know, but like I said this in many of my videos, it's not about the strategy that you have. Actually, the strategy doesn't really matter. The reason why you lose is because you use leverage, right? This is why the broker also gives you happily leverage, and as much leverage as possible, maybe a 1 to 500. This you can use in Blueberry actually. And they give you that because they know the more leverage you have, the bigger your lot sizes, the less you can stay in the market, right? High leverage, high sizes, high lot sizes just means that you have a lot of borrowed money. And basically how it works, the borrowed money, let's think about Apple stock, right? So the borrowed money means if you have a leverage of let's say 2 to 1, something like that, basically the broker finances you half of the Apple price of the Apple stock, right? And let's say Apple is at $120, so the broker gives you $60, finance you $60, right? And you pay the other $60, right? But what happens if your trade goes down, right? It's a leverage 2 to 1, right? The trade goes down and Apple crashes by 50%, right? At that point they lost half of the value, so basically you lose $60, and this is where the broker then cuts your position. This is where the margin call is. So basically the finance part from the broker, it sounds always so good, oh, they finance you this and that, but they don't lose anything. They don't lose anything, right? Because yeah, the broker gives you $60, and finance of this $120 that Apple stock costs, right? Half of it was financed by the broker, so you only need to put in $60 yourself to get one stock, right, of Apple. But the second Apple loses 50%, that's where the margin call is, and the broker is like, oh, you know what, I'm out of the trade, I changed my mind, I don't want to be in this position. And then basically you need to put in more margin to buy back what the broker financed you, or you're out of the trade. And of course, this is an example of 2-to-1, right, from the financing part, 2-to-1 leverage. But here we're talking about 1-to-500. So you can see that basically you cannot hold the trade at all. Because think about it, if you have a leverage of, let's say, 1-to-5, that just means if something crashes 20% against you, you get a margin call. This is with 1-to-5, right? 1-to-4 means 25%, and so on, right? So you have a leverage of 1-to-10, then basically 10% against you, and you're at the margin call, because the broker finance you the other part, right? You finance, in if you have a leverage of 1-to-10, 1/10 of the stock price you finance yourself. The other 9/10 are financed by the broker. But once that 1/10 is used up, the 10% minus came, the broker is like, oh, I'm out of this trade. Guess what? Margin call. Either you've put in more, or we take we take you out. In German, there's a good word, Reißleine. The broker takes the Reißleine, right? So anyway, that's just how it works. And the higher the leverage, the less you can hold anything, right? So this is exactly why the broker happily gives you the 1-to-500 leverage. Of course, you can still control this leverage somewhat with the lot size. You can do a very small lot size on the 1-to-500, but normally the broker knows if you have a 1-to-500 leverage, what you want to do. You want to do the high lot sizes. This is the reason why you got the high leverage in the first place, because you want to trade higher lot sizes than you can, right? Then you can finance yourself. So, and the broker happily gives you this because he knows, the broker knows that once the market just moves a little bit against you, which it will happen, statistically it must happen, right? Because the market goes up and down randomly, and it depends on the volatility of the pair. That's why I always preach the key to success is controlling your leverage, knowing your volatility of the instrument. This is how you control your leverage. You need to know the volatility of your instrument. The broker loves if you take a high leverage on a high volatility instrument, then you must lose, because the probability, the chance is so high that eventually it will just randomly spike against you and you lose your whole account. This is why the broker gives you the leverage happily, and this is the reason why everybody's losing. It's not because of these courses that are bad or the strategy is bad. I don't agree with this, but it was a very fun joke. I love the joke here from Iman Trading. But the reason is the leverage. This is why everybody loses. So don't get it twisted, and let's keep going here, right? And this is also why the trader loves to B-book you, right? Because on the B-book, it means that the broker is on the other side. That means once you lose, the broker wins. And how it works is you have all the leverage, so you will be out immediately of your trade very fast. You need to pull the Reißleine and be done, right? And lose your money. And the broker, on the other hand, doesn't have any leverage. The broker has a lot of capital. The broker doesn't use any leverage. So if you, for example, go long somewhere, and for example, you go long with a 1-to-20 leverage on Apple. 1-to-20 means you can only endure 5% minus, and 5%, a stock can crash 5% in one day, right? So, and the broker let's say the broker gives you 1-to-20 leverage, and you go long Apple, right? The broker, on the other hand, is short at that point if the broker is B-booking, right? So what happens? The second when Apple crashes 5%, you're out, your money went to the broker, right? But let's say Apple keeps on rising, right? Then the broker is losing, but what happens? The broker doesn't have the leverage, right? The broker can easily endure these kind of losses, right? Maybe this was kind of a bad example because stocks always go up, so the broker should not go against you short on a stock. But on Forex, it's much easier because Forex is range bound, right? They always reverse to the mean. So there, happily, the broker gives you a very high leverage on Forex because anyway, it's going to go up and down. The broker can endure these kind of waves because the broker has a lot of capital, doesn't care, doesn't use a leverage, and you have the high leverage where you're forced out the second you mess up one trade, right? So let's keep going. This is how the broker collects your money. It has nothing to do with your strategy.
So, Don was running what Blueberry calls an MAM, or multi-account manager system. His followers were able to invest in this by connecting their own Blueberry trading accounts to it, which meant that Don's trades would be automatically copied to their accounts. Think of it like a hedge fund, but for fake gurus with no formal education, legal qualifications, certifications, or backgrounds in finance, economics, or math. What could possibly go wrong? And just like with hedge
Okay, just to clarify quickly, yeah, there are these account management systems. Basically, there's like a copy trader. You know, you can do this also with which is a copy trader that you privately buy the service and then connect all the accounts. This now is done by Blueberry Market, so it's a fancy copy trader, right? Basically, all the accounts are connected. You can maybe even control the lot sizes, so smaller accounts have smaller lot sizes, higher accounts have the higher lot size, and then you just copy the trades through. That's basically what's going on here. There's a master account that Don Vo is basically managing, right? And this year is very nice, guys. I see this average annual returns 2011 to 2022. So I'm thinking what Iman Trading wants to point out here is that, yeah, even average hedge funds, which don't use leverage, right? Hedge fund, why should they use leverage? They have a lot of capital. They're not stupid enough to use leverage. But even they, without leverage, just timing the market, they screw up, right? You can see this. It's just impossible to beat the market, right? It's impossible because passive investing like that, just following the index over time, of course you can beat the market in 1 year, but you cannot beat the market in 10 years because you're building always average entries with passive investing. Average entries is the most efficient price over time. So basically, they're outperforming average hedge funds, which means already giving your money to a normal hedge fund is probably a bad idea, but a hedge fund can outperform the market actually. In 1 year, 2 years, 3 years is possible, but everything over 5 years gets harder and harder and harder. No hedge fund is actually doing this consistently, right? Only maybe Berkshire Hathaway kind of, but Berkshire Hathaway is also kind of passively just investing, right? They have this approach of, okay, they try to time maybe, but most of the time they're just passive swimming with it. So yeah, even these hedge funds, they cannot outperform the market. And yeah, and even now a trader that is trading with high leverage, what will happen if you invest there? It's probably not going to end up well, right?
Hedge funds. Investing your money there is a great way to be outperformed by the people you think you're smarter than who just bought an S&P 500 ETF and never touched it. Less than a month into Don's managed account with somewhere between $1 to $3 million worth of investments by his followers, Don
Holy
went
shit.
completely rogue and took
1 to 3 million was invested there. That's a lot. I mean, this guy Don Vo, how you say this? He has actually a big YouTube, I think. So like I said, I never really checked it out a lot. I just sometimes watch the live streams because I want to be entertained, and the live streams were kind of fun, but I never understood their entries. They just always had these buy limit orders, and then at some point they went into gold. It was always gold with some buy limits orders. You can see here's also trading gold. Not buy limit, sorry, stop orders. Always they had a stop order in place. So only at a certain point they went in, and I think they wanted to catch fast movements quickly or something like that. And yeah, you can see here, what am I seeing here actually? They're stacking up gold positions right here in the same direction. So that's kind of, yeah, it's kind of bad because if you do that, I mean, I also use averaging in my system, but I go much more long term. I don't go on these small charts like 5 minutes, 15 minutes, what you can see here. And this is a bad average because everything is almost the same price, small time frame. You should never average in like that. Averaging is very powerful, but you need to do it in a way that you leave a lot of room in between, right? A minimum like 20 pips or something. Then you put in the next average, and also you cannot overdo it. You can average maybe, I have a rule, I average 3 times, no more than that, because it's very efficient in getting an efficient price, because you never, on the first trade, almost never you get the price where it immediately turns, right? It doesn't happen, especially if you want to hold for a longer time, it never happens. So almost never. Then you just average in the second time, it's more lower, you average in there, the third time it's more lower, you average in there, and eventually it will turn and the bigger time frame comes through. That's at least how I do it. But here it's just very bad. I mean, what is that this is like every trade here in the same candle, almost the same price. There's no point. There is actually no point in doing that. You're not really building a better price. Of course, if you have a lot of trades in here, yeah, the average price gets pulled down a bit, but it's not a lot, right? This is very bad. I don't know why they would do that. I don't know what the strategy really is though, but I will not do that. At least the sizes are small, but 0.04, but gold is a beast. Gold is the most volatile beast. That's why I also don't trade gold. It's too volatile, and you need to be super small. But at least the sizes, they are small, but they're just many orders, and that gets you in trouble because the size becomes too big then.
Hundreds of trades in just a couple hours. The arrows represent those trades, and this is how he did. Minus
Oh.
97%.
Oh shit, okay, this is the equity curve. Let's have a look here then. So basically, he did very well in the beginning here, but this is all in 1 month, right? This is all in August. Crazy. So he he got 50%, over 50% gains in 1 month. That's crazy. That's a lot. And yeah, I think what just happened here is, though, I noticed, because I also watch his live streams. Sometimes he try to take these little moves, right? And that works out a lot of times. It's kind of scalping, right? That works out a lot of times. So you always have this balance curve that goes up. I talked about this in other videos, why the low risk reward stuff makes you very consistent. But there's a danger, of course, because the curve will go up until this one position happens where it's just trending, like it's starting to trend against you, you don't cut it, and then you just give up all the performance. Normally you go back to zero, but in this time you give up all your profits. But here he just lost control of it, right? He was probably emotional, and so it just destroyed the account. So this is exactly the problem. Scalping, I like scalping, and it makes you very consistent. And I believe in dynamic risk reward. Go watch my videos. I talk about this all the time. Sometimes you need to have bad risk rewards under 1-to-1, maybe even like 0.7 or something like that. But you need to pack those, and then when you have those gains from the bad risk rewards, then you try to take them on a high risk reward play occasionally. And 70% of the time market is ranging. There you want to have the bad risk rewards. 30 to 20% it's trending. There you want to do a high risk reward. This is the dynamic risk reward approach, right? And here, I think this is just a strategy with low risk reward. That's at least what it looks for me, and then it gets out of control, right? Completely. So let's have a look.
Hey, just like ICT. Nice. Here's where it gets
What?
fun. Blowing everyone's
that was
account
ICT,
through
okay.
high frequency trading everyone's
Let's
account.
see. I was just confused there a little bit. I thought this was also done one, but this is ICT. Deliberately, then he claimed he was going to run it to 1 million from here. What a whole habit. There's also 97% loss on the account. This week, everything, this happened quickly in 1 week, so it was probably kind of similar things happen, right? Averaging into a trade, or like over leveraging one trade, and you're done. This is exactly why the broker loves to give you a lot of leverage, because the broker knows this will happen sooner or later. If you use a lot of leverage, you're gonna be screwed like that, right? Interesting, ICT, he didn't even do any good performance, right? Just like a little bit gains, and then crash the accounts, right? Okay, crashed it. And average win, average loss. Average loss is bigger in the end, because probably held on to a trade, and then average win, he was probably kind of scalping, right? I don't know. Let's keep going then. Average loss 3 times larger than their average win. Okay.
Nice. Here's where it gets fun. Blowing everyone's accounts through high-frequency trading means a big payday for Dawn in kickbacks on commissions. Not only that, but if Blueberry Markets was doing what's expected and booking these accounts, then remember that a loss for a trader is a win for the broker. If 3 million...
Exactly, that's what we talked before, booking, right? It means you're not on the real market where you trade against another trader. Basically, you're in this generic internal market where the other side is just taken by the broker. That's why you have also immediate execution with no problems normally, unless the broker is doing something shady, right? But normally they want to give you very good trading conditions, like, so you just gamble around there, right? And in that case, I'm sure, I don't know, but I'm sure Blueberry was booking, right? I mean, if the broker gives you 1 to 500 leverage, you must be booked, right? The leverage is gonna kill you anyway.
$3 million is lost among hundreds of investors at a CFD broker, then that means the broker just made $3 million. Even if Dawn wasn't in on a secret plan to blow up every investor's account, because anything lost means that amount in profit for the firm.
Why do y'all, a gambler that entered 300 position in a day after taking one trade? Yeah, I mean, I don't think Don Won, he would do this purposely, to be honest. I don't think I mean, this video is taking kind of the route, oh, there's a conspiracy, right? Could be like this kind of rug pull that you normally see in crypto. In crypto, it's obvious every influencer needs to do like a special coin to rug pull you, and even they tell you before, I'm gonna rug pull you, everybody still invests because they think they're gonna get rich and get out before. It's so stupid. But I don't think this is what happened here. I think because there are better ways to rug pull people. He could also just create a coin and then rug pull, right? But I don't think that he's doing that together with Blueberry, and also Blueberry is gonna have a massive hit on their reputation, and this is of course also not allowed. People can start suing and stuff. So if there's some kind of collusion, it's gonna be bad, right? So I don't think that happened. I think what happened here is basically he did well in the beginning because he's using a low risk to reward, right? Scalping, making quick gains, and I can understand the problem is that if you do a low risk to reward play or strategy, what normally happens is you have a very high win rate automatically, like 80-90%. So you feel like the best trader in the world, but it's not because your strategy is so good. It's because your risk to reward is low, which automatically gives you a high win rate. Anybody can do this, right? The market is anyway random up and down. So maybe he was thinking, oh, I'm very good, I can show this. Many months I was always good, because normally you can work many months well with a low risk to reward. I experienced this myself. I have flipped accounts with only scalping, right? And many months it was stable, but then I don't know, after 2 months there was this one day where the trade got out of control. You didn't get out of a big trend, and then everything is lost because the leverage is too high and the risk to reward is low, right? Meaning that it only takes one bad trade to destroy your whole performance. So I think he was just overconfident, believing in his system, because he probably was trading many months well with the system, right? And then he was thinking, okay, I can make more money if people just following me, right? I get commissions, of course. Every time I make a trade, I get commissions, and probably some percentages of the gains as well. So he was just thinking, I just take this, what I'm doing anyway, just let people copy it, and then I get more money, right? So I think he did this with good intentions, but like I said, he probably knew by himself also, though, that his system is not sustainable in the long run, because almost no trading system is sustainable in the long run, especially not with leverage, right? So probably he was just thinking that for a long time it will be good. Can get a good reputation from this, then get some good commissions, and then once it goes bad, okay, yeah, it's be booked anyway. But maybe he was hoping that, or thinking that, okay, maybe he makes some gains, 50% or whatever he did, and then he loses maybe 20% of that, but it's still good, right? But in this case, he destroyed the whole account, right? But I don't think it's on purpose.
The idea of collusion is easy to believe for a couple reasons. 1, anything lost is direct profit for the broker. 2, Don completely broke his typical trading behavior and began high-frequency scalping hundreds of trades in just a couple hours, meaning more kickbacks on commissions for him. And 3, he's been completely silent about the situation amid public outrage for what happened. The only thing he's done is stopping new people from being able to join his Discord server. Updates will be in the pinned comment, and probably a follow-up video to this on my other channel here.
Oh, there's gonna be a follow-up video. Definitely want to check this out. If it's on already, then we need to react. And what else? Yeah, so Don Vaughn didn't reply anything, so that's bad. But what you want to do? He's gonna be depressed probably at this moment. I don't know if this happened. If this would happen to me, like so many people losing money because of my trading system, I don't know what I would do. I would be so down. And I mean, the thing is, I don't think he would do this on purpose, because yes, of course they could make a lot of money. I mean, Blueberry made a lot of money. I don't think he made a lot of money, but let's say there is some kind of agreement that they do this on purpose, which if this comes out, they would both have a lot of trouble. But I don't think they did that. But also, it's stupid because in the short term you make a lot of money, but in the long term it's bad, because your whole reputation is gone, right? I mean, his channel, I don't know if how it will continue now. He probably also sold a lot of education material, which nobody will buy now because of this, right? It's very bad for your reputation. So in the long term, this is just bad. So I don't think this is on purpose, right? But let's see. Dude, I've lost 47k. I'm sorry. I put 50k on the man. Save money from work. That's so bad. I always feel so bad about the stories of people just saving a lot of money and then it's gone like that in one day of bad trading. But yeah, that's trading. That's trading. It happens to everyone like that. Trading is very dangerous, especially with leverage. It's the leverage that is the problem here. Yeah, I'm so sorry about for these people. I just hope they can somehow recover. And yeah, it's terrible.
Everything that went down is the textbook way that you would pull off a scam like this, but there is no direct evidence of collusion between Don and the broker. So let's say
Allegedly.
he didn't intentionally lose everyone's money in 3 hours.
Kind of crazy. The one person I trusted with Forex turned out to be a scam. Great, another account transfer whatever you have left to that account. I don't think it's a scam. I just don't get what's happening. This is right. But in this video, they say Iman Trading. This in the beginning they said somehow he got richer. Is that proven that Don Juan got richer after that? Because if yes, then of course then it's very bad. But I don't think it's intentional. But I don't know. Tried is not working. FML guaranteed you to had a deal with Blueberry to get the commission of the deposit. Yeah, I mean, I'm sure he had some deal with Blueberry to get commissions. Of course, he wanted to earn from this, of course, and also make a good reputation about his trading, which he failed. So, but that's of course his tilt trading is normal to see with his normal account, but with this account management is kind of disgusting. Yeah, I mean, the problem is that this account management is not a good idea because also it puts a lot of pressure on the trader. And like I said, I just occasionally watched this video of Don Juan, but the streams and stuff, but I always felt like this guy is not profitable, like because the trading system was weird. It was always yeah, going with this buy stops or whatever, taking out the very little on the markets. I never really understood it, but for me it just felt more always like kind of like a gambling, so. And I don't know if he ever showed some track records before, I don't know, but maybe people just kind of believe it blindly and jumped into it, and then this stuff happens, right?
Okay, well here's some advice for Don Vo from Don Vo.
So, chat, we didn't make back today's loss. However, what we didn't also do is chase back the loss. And that's something that a lot of traders tend to do after they take a loss. Now, when you take a loss, right, and you try to chase it back, what you're doing is you're thinking emotionally. You're taking trades with your emotions rather than taking trades with your logic, which is what you should be doing, right?
I agree with that. Yeah, never chase the losses, but it's easier said than done. Everybody is guilty of once you have a bad day. And this is exactly the problem with the scalping system, like I said, because you are gonna be good many days in a row because of the low risk to reward. And like I said, I'm not saying a high risk to reward is good either. I'm not saying you need to do a 1 to 5 or whatever. I think high risk rewards systems also have a lot of problems. I believe, like I said, in dynamic, you need to take the good things about both worlds and adjust it to the market conditions, because the market is changing. In a range bound market, you want to have low risk to rewards because it's ranging, it's going to go up down. But in a trend market, then you need to switch somehow to a high risk reward. And of course it's very difficult because you never know exactly when it's ranging and when not, but we know that 70% of the time it's ranging, 30% of time it's not ranging. So in those 70% of time you need to play a low risk reward, and in the 30% of time you need to do the high risk reward. And like I said, high risk reward systems are also bad because they give you always a constant drawdown on your account. Always you're constantly in a drawdown on the account balance, and you need to have this one winner to get everything back. It's also bad. It's very bad for psychology. But the other side of the coin is the low risk reward, where you're always winning and you feel like the god trader, but then on one day you can screw up everything. And I think this is kind of what happened here. I'm not sure, I don't know what is his trading system, but for me it looks like a low risk to reward, and he would averaging in, right? So you can do this, you can average sometimes, then you get this fast spike, you take the gain, and then you're out. And it's actually a good system, because if you average, you average your price, and if you take a small gain, you will win 90% of time. So it's going to be very good. But if you still need to control it very well, because the risk is very, very high, because on one day when the average goes wrong and you stuck in a trend, you're gonna screw up everything, and there you need to cut it quickly. If you don't cut it on that day, the system is gonna fail big times, right? That happened here, I guess. And then you have this pressure of a lot of accounts are following you, and this is all public. A lot of people are following you. This is terrible. I would be devastated if this would happen to me, to be honest. So I'm sure he must be in a big hole right now, and I'm sorry about that. But at the same time, of course, it's super shitty because all the other guys following lost a lot of money too, and they're devastated as well. So it's just bad overall, and I don't know. I hope everybody kind of gets out of the situation somehow, but that money is gonna be lost. This with Blueberry now, gotta get it back, right?
Interesting. Well, if this wasn't intentional, and if you're capable of feeling remorse, then refund people.
You're ruining me. How much did you man? 34K, but that was everything. Friend lost 7K. Wait, well, I'm gonna go back quickly a bit.
Then refund people the money you've made from selling useless courses and trading signals, Don.
Yes, that's a good point. That he should do. He should actually say, okay, I'm sorry, I fucked up. It can happen with this sort of strategy, right? And he can also, he should also clearly say, the people who put in the money, it's also their fault, right? They just follow the system, put in their money. They have the risk as well. It's not like the people who invest in this are innocent. They completely knew the risk of CFD, or at least they should inform themselves, right? And of course, they're also have some responsibility in, that they lose, but there should be some kind of goodwill, I think, here. If I was him, or what he should do, because he has a lot of other income streams, right? I don't think he's a poor guy or something, because he sells a lot of courses and whatever, has a lot of views on YouTube. I would wish for this many views, right? But I'm not consistent on YouTube, that's why I don't have it, but he has it. And he should do something to give it back to the people, at least, like, yeah, even any type of refund, like 30%, anything would be good. Yeah, that's what I would kind of think for, because like 30%, give it back. The rest, of course, will be hard, and because the people who invest in this are also their own fault, of course, but should refund some of it. He should do that to come clean.
Trading signals from these fake gurus are completely illegal, by the way. Most of you didn't know that. One fun fact is that he listed Trader's Domain specifically as a trusted broker. And yes, we're talking about that Trader's Domain, the big one from CoffeeZilla.
What is
you,
that?
Mr. Stop
I
Loss.
should look.
As for Don's trading style when he's not.
What is that video with CoffeeZilla? I don't know that. I should check that out. Maybe react on it. People actually thought this guy could trade. How he had an audience for the community is beyond me. I used to sit in his stream, chuckle to myself about his 5-point wins on gold whilst risking 200. Only a matter of time before this happened. So okay, yeah. So this message is like the proof, right? I just really occasionally watch the streams, and this was also my impression, that he goes in on these kind of spikes with a buy stop always, or a sell stop or something like that, and then always takes very little out of the market. And essentially the risk is unlimited, right? Especially when you average in a losing trade, you need to be so careful. Averaging in is a powerful tool, right? But only if you leave a lot of room in between, and if you have a certain limit of average, right? 3 times maybe, 2 times maybe, but you need to leave 20, 30 pips in between, right? At least, probably more, even better. But here, you saw it in the screenshot, he averaged like crazy. There's no point in averaging that fast. That's just increasing the size and not making the entry more efficient, right? And then, yeah, like I said, if you want 5 points, it's gonna go well. It's gonna go well for many weeks, but then this one day will happen where where the trend goes against you. Then if you don't cut it and you even average in, it's done, right? RIP.
He's not allegedly tanking accounts to make an easy million. He uses a strategy called picking up pennies.
This phrase describes investments in which there are small, steady profits, but also the risk of catastrophic loss. What is that? Martingale or what? Martingale is even worse, because with each average you increase. I don't think he's doing that, because Martingale never works, but normal averaging is powerful, but only if you do it, like I said, with a specific strategic approach.
Pennies in front of a steamroller with scalping-sized profit targets and swing trading-sized stop losses. He does this while marketing his win rate, because his target audience is beginners without enough experience to realize how meaningless that metric is on its own. And if you're not there yet in your own trading journey, then watch the video here in the top right and description. It crushes me to see that multiple people have lost their life savings because of Don, and we wouldn't be in this situation if people stopped giving money to trading influencers. To the inevitable angry Don Vo followers, which is a crazy thing to say after he did this to his fans, I sell nothing. I'm happy with the funded account payouts I've received, with one more on the way as of me writing this, and my free website, Iman Trading.
I mean, yeah, it's pretty obvious. I mean, if you know trading that the system didn't really work or not consistently works, I mean, not in a long run sustainable because of this very small risk reward. But it's funny how he then marketed the high win rate of like so many win trades in a row. I mean, that's not special. I mean, it's just a byproduct of this strategy. If you have a low risk reward, you automatically gonna have a high win rate. Everybody can have that. It's not that your strategy is good. It has nothing to do with the strategy. It's just the statistic is like that, right? If you have a low risk reward, automatically your win rate is going to be up. So you're going to feel like the best trader in the world. But that one day when the trend goes against you, you need to cut it immediately. Otherwise, that trend will destroy you. On the other hand, if you work with a high risk to reward, like 3-1, 5-1, whatever, or even higher, you're going to automatically have a very low win rate. Maybe only, I don't know, 10% or something. You're going to lose all the time. And consecutively, you're going to lose. You're going to feel like the worst trader in the world. But again, you guys need to understand it has nothing to do with strategy, because at that point you're going to feel like, oh, my strategy is bad, then you're going to strategy hop. It's not the strategy, it's that you work with a high risk to reward. You bound to be bad, you must be bad, right? And the only thing you can overcome this is watch my other videos, but I explain it. High risk to reward, if you do that, okay, some people use static high risk to reward and they make gains in the market, but it's very difficult. And what you actually need to do at that point is, if your risk reward is static, right, we're talking about you always go for 3-1 or something, then you need to be sidelined on the market pretty much all the time, because the problem is it's like you're shooting from the midfield line in soccer on the goal. You're gonna miss, and maybe after 50 shots one is gonna go in, right? The problem is you need to be sidelined for 49 shots, right? And then only get active for that one shot in the best case scenario. Of course, it can be a little bit more. You can maybe be sidelined on 45 shots, and then on 5 other shots you are active, and one of them is the winning one. That would also give you a winning strategy. But the problem is you need to be always waiting and almost never do anything if you have a static high risk to reward. And the people do the opposite. They want to trade every day, and they think they can get every day to 5-1. It's not gonna work like that. It's possible to get these high risk reward 1-5 or whatever, but you need to be sidelined like crazy. And I still think this is a bad approach, because how do you know exactly when? I mean, let's say this example again. You have 50 shots. How do you know that out of 50 shots when this one good shot is gonna come? How do you know that? You're not gonna know that, right? You're gonna miss it. And that's why it's still freaking difficult. And that's why I believe in dynamic risk reward, right? Like, most of the time you play the bad risk rewards because they're safe, they're gonna grow your account, but you need to be careful when you play the bad risk reward and you see a trend against you, cut it immediately. Otherwise, that one day is gonna happen where it's gonna screw up everything. But it doesn't need to be ending like that, right? In a bad risk reward, normally you screw up, but you just give back all of your gains that you make over some days. Normally, but if you stay stable in your mind, that's okay. But then you want to have a dynamic risk reward where when the market depends on the market. When the market is switching to in a trend market, then you need to play the higher risk rewards, 2-1, 3-1, and that's basically what I believe in, dynamic risk rewards, right? And that's the key. So yeah. So Iman Trading, I like your video, very good job here. I like it. I like a lot of his videos actually. So let's wrap it up here.
Trading.org covers the top firms that I'm using, as well as having everything I can possibly do to help newer traders get started. Patreon has nothing on how to trade, and the only person who has ever signed up thinking that it was a mentorship had their massive $4 investment fully refunded. Thank you, stay safe, and be smart.
Alright guys, that was it already. I thought there was maybe something in the end, but no. With that being said, hope you enjoyed the reaction. Catch you in the next one. Peace.